Alright guys, I'm going to talk about two important things in this video. Number one is the plan of trading EUR/USD, and number two is why fundamental analysis is more important than technical analysis and logics combined together, and why are logics more important than technical analysis. So, and also there is third point which I will mention, that why we were choosing EUR/USD over any other currency pair. So first of all, let me tell you that this is the right time to discuss about selling US dollar a little bit, because uh, there is an anticipated correction against the recent bullish move in the US dollar index. And I will take you to the chart and I will show you the fundamental reason first and the importance of fundamental reason. For example, if we simply consider technical analysis, this candle pattern is looking more bearish than a bullish candle pattern on EUR/USD. So if we look at the last three candles, then you will figure out that the midpoint of this black candle is something around 104.28, and market still hasn't closed above the midpoint. So it's still technically not 100% valid bullish candle if we talk about 100% technical accuracy. However, if we look at the USD CHF, we have this totally valid bearish pattern. You can call it three inside down. And if you simply believe in technical things, you will rather sell USD CHF than buying your USD. But if you are also an economist and an analyst, you'll figure out that recently Swiss National Bank actually cut the interest rate by 50 basis point versus the expected only 25 basis point, which made Swiss franc the second biggest potential currency to go against for carry trade. My point here is people would rather like to try to find out the opportunity to take long positions in USD CHF or any other currency versus CHF. For example, it may be GBP CHF or whatever, to make this kind of profit from the swaps besides making profit by the pips difference. So after Japanese yen, CHF is the currency against which people would go for the carry trade benefits. So of course, CHF is not a potential currency to trade against dollar in case we are going to sell US dollar. All right. So that's why fundamental is necessary, and we shouldn't only believe on technicals. Number two, logics. If we simply believe in 100% technical method of trading, you wouldn't go long in your USD yet, because this candle pattern doesn't suffice to be 100% accurate bullish candle pattern, because it hasn't closed above 428, the midpoint of this black candle. However, if we understand the logic, we can also look at the other pair. For example, we can look at GBP USD, and you can see what happened here. There is no similarity here. There is no similar candle pattern, but we can try to do something like we can go to dollar index, and let me first plot the chart of dollar index. So bonds, indices, US. All right, I guess I will find dollar index in this category. So US dollar index CFD. So yeah, so I found it in this category. Show, close, and here we are. So this basically is not a traded thing. It is just an index. And if you look at the candle pattern on dollar index, we have a bearish engulfing candle pattern, which is bigger than this one. So here people would like to see only on last two candles, because the second last candle is big enough to consider for the uh, for a tradable candle pattern. So there may be dual, single, or triple candlestick patterns, and it's all about understanding the price behavior. So my point here is, logically, if we try to understand, we do have enough bearish price movement in US dollar to consider an upcoming correction. That is why, even if technically it is not 100% accurate triple candlestick pattern to the upside. It could have been three inside up or maybe morning doji star, but technically it's not correct because it didn't close above the midpoint. However, if we try to understand all these logics and comparison at other uh, instruments, we can understand that this still is a valid uh, pattern and we can go for the long. So that's why logics are important. And there is another reason why logics are important, not only the rote technical method. For example, if we want to understand whether or not the bears have been exhausted on GBP USD or Euro USD, or in other words, if we really want to understand whether or not the bulls of US dollar has exhausted, we can try to look at naked price action. So see, if we want to see the naked price action without use of any indicator, you can see three big candles to the downside. Price was moving to the downside faster than the movement from this place to this place here. So if we compare this swing and this swing, you'll clearly find that this swing is slower. Except for this black candle, there is no big candle here in this swing. And but if we go according to the rote technical method, 100, so we'll not find it. What we will try to do is to plot any oscillator and to figure out whether there is bullish divergence or not. So if we want to plot RSI here, relative strength index, which is one of the most popular oscillators, you can see that the RSI made a higher low here. Price also made a slightly higher low. So if price actually made slightly lower low and the oscillator made slightly higher low, then we could have said that this is accurately a bullish divergence. But right now, if again we believe in 100% the rote technical analysis method according to the books, it is not an accurate bullish divergence. However, if we see this same thing on GBP USD, this low is slightly below the previous low. So according to technical method, this is a lower low and the oscillator made a higher low compared to the previous low. So technically we have the bullish divergence here and we do not have bullish divergence on Euro USD. But if we try to simply understand the logic here is to find out whether the bears of Euro USD exhausted or not. And if they have exhausted and price in the second swing has been slow. So logically, even if even though technically we do not have the divergence, logically we do have the slower price action, and we can consider this to we can use this to our advantage, and we can still go for a long entry. So that's why logics are more important than the simple rote technical analysis methods mentioned in the books. So these are my points of why fundamentals are excuse me fundamentals are important and why logics are important and not just the technical methods. All right, now let's go to 1 hour time frame to see something which is really important. uh, Double bottom was already made and price already crossed above the neckline. It was driven by the poorer PCE data released on Friday from the US, which was 0.1 percentage point less than expected, and it drove the price in USD to the upside. And if we believe in the classical approach, it simply can go to the upside by the similar distance from the bottom. So from bottom, approximately 78.8 pips is the distance. So it can go up to 78.8 to the upside, which will be something around 105 even area. So the very first position target of the position can be 105. If we go to the daily time frame, we have double bottom kind of pattern. However, this pattern will be completed at this neckline once price will reach around 106.27.9 area. However, we can trade this in anticipation of formation of this double top, and it is driven by two factors. One is fundamental because it was triggered by the poorer PCE data from the US, and also supported by this technical setup which is there on the 1 hour time frame. So if this will drive the price to 105 even area, then the price will is something around here. This is 105 even. This is the target of double bottom on the 1 hour time frame. And once it will reach here, we'll see what further economic data are available in the market, and we have to figure out the further trading decisions. Or else we can do multi-position trading, and we can uh, set different targets, one at 105, next at this 106.27 area. Before I talk about only EUR/USD targets, I also let you understand that why did I not choose to buy pound or sell USD CAD or sell USD JPY rather. Why did I choose to buy EUR/USD? So I have already told you the reason of Swiss franc, why I excluded Swiss franc. Similarly, there are similar reasons, fundamental reasons. For example, Bank of England, and if you look at the MPC votes, in the recent week, as Bank of England cut the rate by this by the same, I mean, 25 basis point as expected. However, there was one extra vote for the um, reduction of the rate. So anticipated votes for reduction of the rate was two. However, when it was released, actually three members of the MPC Monetary Policy Committee from the UK voted for reduction, which was a bearish news. So we excluded GBP. And if we talk about Japanese yen, nobody would like to go uh, short in USD JPY because of this huge difference of interest rate and high swap charges. So 22 point is the swap charges if you go short in USD JPY. And if you go long in EUR/USD, the swap charges is relatively less, much less. Like it's, uh, sorry, it's again USD JPY. I need to show you EUR/USD. All right. So specification. If you right click on EUR/USD and click on the specification, a window will appear where you will be able to see the point, swap long and swap short charges. So swap long in EUR/USD is minus 5.48, whereas swap short in USD JPY is 22 point something. So it's like almost 4.5 times higher negative swap charges in USD JPY if we want to sell USD JPY. So that's the reason why we would not like to sell dollar against Japanese yen, rather would like to buy euro against the dollar. So these are the reasons why I excluded Canadian, so Swiss franc, Japanese yen, and pound. And remaining one currency pair is USD CAD. So if you look at the recent retail sales and CPI data released last week from Canada, it wasn't impressive enough, and there has been very persistent uptrend in USD CAD on daily time frame. And Canadian dollar is not a potential currency to buy against US dollar as per the given economic scenario. So this is how we have seen the economic things, and we have figured out to trade euro against dollar according to this economic analysis, and then we have used the technical things to figure out the targets. And now if I talk about how we are gonna place this stop loss. The idea of placing stop loss is very simple. We will not place any stop loss, rather we will wait for closing of any daily candle below this low. And if it happens to get closed below the low, then we'll take loss and exit. We do not want to get stopped out, because stop losses sometimes can get you stopped out. Last time what happened, see the low of this candle on GBP USD was 124.866, and the next low was made just slightly below 1.24744. So if anybody placed the stop loss, he or she would have been stopped out. So that's why we need to look at the closing to understand the final price behavior in such kind of cases. So that's all about this trading and analysis. Thank you for watching.